Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Draftkings Inc. annual report. Draftkings Inc. is a leading digital sports entertainment and gaming company that provides a wide range of products and services to its customers. At the core of their offerings are online sports betting and daily fantasy sports, which allow users to engage with their favorite teams and players in new and exciting ways. In addition to these core products, DraftKings also offers a variety of other services, including digital lottery courier, media, and retail sportsbooks. The company's iGaming platform provides access to online casino games such as blackjack, roulette, baccarat, and slot machines, giving users the opportunity to try their luck at various forms of gaming. DraftKings is also committed to innovation in the gaming industry, designing and developing software for online and retail sportsbooks, as well as iGaming operators. This allows them to stay ahead of the curve and provide cutting-edge experiences for their customers. Furthermore, DraftKings has expanded its offerings with the launch of its marketplace, a digital collectibles ecosystem that provides curated NFTs, non-fungible tokens, for mainstream accessibility. This platform offers users a new way to engage with sports and entertainment, and to own unique digital assets. Overall, DraftKings is a comprehensive gaming company that offers a diverse range of products and services to its customers. From online sports betting and daily fantasy sports to iGaming and digital collectibles, they have established themselves as a leader in the industry. The decline of DraftKings Inc.'s stock price by over 57.74% in the past year can be attributed to several key news events that have impacted investor confidence. One major catalyst for this downturn was the company's disappointing earnings reports and forward-looking guidance, particularly for fiscal years 2025 and 2026. The Q4 2025 earnings release and disappointing 2026 guidance in February 2026 was a significant blow to investors. Despite reporting stronger than expected fourth quarter 2025 results with revenue up 43% year-over-year, the company's conservative outlook for the upcoming year fell short of analyst expectations. The adjusted EBITDA guidance also missed projections, leading to concerns about increasing competition and planned investments in DraftKings' own predictions product. Additionally, the Q3 2025 earnings miss and lowered full-year guidance in November 2025 further contributed to the decline. The company's third quarter 2025 revenue of $1.14 billion missed analyst expectations, leading to a revised full-year guidance that fell below consensus estimates. This shortfall was largely attributed to customer-friendly sport outcomes that negatively impacted sportsbook revenue. The CONE 2025 earnings and revised full-year guidance in May 2025 also played a role in the stock's decline. The company reported a miss on both earnings per share and revenue for the first quarter of 2025, leading to reduced full-year guidance and adjusted EBITDA projections. Although the stock initially saw a slight increase after this announcement due to other strategic initiatives, the lowered guidance contributed to the overall negative sentiment and sustained pressure on the stock throughout the year. Overall, these key news events have significantly impacted investor confidence in DraftKings Inc.'s future prospects, leading to a substantial decline in its stock price over the past year. DraftKings Inc. market capitalization of $11 billion is significantly larger than the average industry peer of roughly $1 billion. This shows that DraftKings Inc. holds a significant advantage in their industry. DraftKings Inc. trades at a higher price-to-book ratio of 17.05 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 76% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline at Draftkings Inc. are multifaceted. One key factor is the utilization of net operating loss (NOL) carryforwards, which can significantly impact the company's tax liability and bottom line. Additionally, research tax credit carryforwards also play a crucial role in determining the company's financial performance. The ability to utilize NOL carryforwards effectively has been a major driver of revenue growth for Draftkings. By utilizing these losses, the company can reduce its taxable income and lower its tax liability, resulting in increased profitability. Conversely, if the company is unable to utilize its NOL carryforwards, it may face significant tax liabilities, leading to a decline in revenue. Furthermore, changes in regulatory environments and litigation outcomes also have a significant impact on Draftkings' revenue growth or decline. For instance, favorable court rulings or settlements can lead to increased revenue, while unfavorable outcomes can result in significant financial losses. The company's financial performance has shown significant improvement over the past 3 years. In 2023, the net income was a loss of $802,142, but by 2024, this had decreased to a loss of $507,285. However, in 2025, the company achieved its first profit, with a net income of $3,710. The improvement in net income can be attributed to various factors, including higher net revenue margins and strong performance from key product offerings such as sportsbook and iGaming. In 2025, the net revenue margin was 7.1%, while the adjusted EBITDA margin was a notable 30.6%. These figures indicate that the company's profitability has increased significantly. The reasons for this improvement are multifaceted. The company has managed to achieve profitability on a net income basis after experiencing cumulative losses and negative cash flows from operations in previous years. However, potential risks to the business still exist, including compliance costs with regulations, regulatory fines and penalties, tax rates that are higher than expected, and potential for reduced profitability due to tax increases in existing jurisdictions. The company's financial performance indicates a consistent generation of positive operating cash flow. According to the operating cash flow summary, all quarters in both 2024 and 2025 show positive operating cash flow, with Q3 '24 having the highest value at $14.9 billion. The net cash provided by used in operating activities is also positive for 2025, $662,855, and 2024, $417,767, further confirming this trend. Additionally, the cash flow statement reveals that the company generated $444 million in cash from operations. These figures collectively demonstrate a strong ability to generate positive operating cash flow, indicating a healthy financial position. The company's debt level has experienced a notable increase over the past year. According to financial reports, the total long-term debt as of December 31, 2025, stood at $1,835.6 million, representing an increase from previous years. Furthermore, the quarterly debt levels have also shown a significant rise, with Q4 '25 reaching $16.7 billion compared to $14.9 billion in Q4 '24. In contrast to the rising debt level, the company's interest expenses have seen a substantial decrease. The interest expenses for 2025 were reported at $19.9 million, down from $44.3 million in 2024. This reduction in interest expenses suggests that the company is either paying off its debts or has secured more favorable loan terms. Overall, these changes indicate significant shifts in the company's financial landscape. Draftkings Inc. is optimistic about its future prospects, driven by a clear strategy that focuses on expanding its presence in the North American regulated gaming industry. The company's management emphasizes the importance of developing successful product offerings that meet customer needs and drive revenue growth. To achieve this goal, Draftkings is investing heavily in marketing channels and personalized customer promotions to attract and retain users. The company's revenue has shown significant growth, increasing by 27% year-over-year from $4.767 billion in 2024 to $6.054 billion in 2025. Management attributes this growth to the overlap of major sports seasons, including the NFL and NBA, which is expected to continue driving revenues in the fourth quarter. DraftKings' strategy also involves improving operational efficiency and reducing costs, as seen in the decrease of general and administrative expenses by 11.8%. The company is investing in its product and technology to support revenue growth, including increased headcount in its product and engineering departments. Overall, DraftKings Inc.'s outlook appears promising, with a clear focus on expanding its presence in the regulated gaming market and driving revenue growth through successful product offerings and strategic investments. The company has been actively involved in share buybacks. According to the extracted summaries, the company was authorized to purchase up to $2 billion of Class A common stock. This authorization led to a significant number of shares being bought back, with 4,476,555,000 shares purchased at an approximate value of $2.163 billion. In addition to these large-scale purchases, the company also participated in a stock repurchase program in 2025, which involved buying back shares worth $523.5 million. This demonstrates the company's commitment to returning value to its shareholders through share buybacks rather than paying dividends. There is no concern regarding inventory buildup or supply chain disruption. The absence of any mention of these issues suggests that current operations and management strategies are effectively addressing demand and supply dynamics, ensuring a smooth flow of goods and materials throughout the system. That concludes the financial summary for DraftKings Inc. Feel free to comment below, and I will be happy to answer them when possible.